Good morning, everyone. Today is September the 24th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Nothing's changed from our daily perspectives. We know we are in a buy the dip formation. If we want to stare quickly at these price points, we can see that there is a little bit of a stall out. We're starting with SPY. Didn't do SPY yesterday. My apologies for that. So although we have very strong uptrend, what we do see is a little bit of a stall out and a congestion or digestion of price. Okay, and so again, dips getting bought. I'm going to move this line up just a hair. I know it's supposed to match a couple of different things, but from a price perspective, we're going to look at the low that the day currently has in focus and see that the dips are buys. Could it be another sideways sloggy mess that we had yesterday? Absolutely. Right? Here is the 8 a.m. candlestick from the 23rd. That's yesterday. The entire 8 a.m. candlestick covers just about the whole range for the day. This, if we look at it on some tight kind of action, is a failed auction, right? It goes up, can't hold, collapses. Then we also have the failed auction on the downside. And I'm using that word probably not quite the way Jim Dalton might use the word, so you'll forgive me. But we do see that up and fade and down and fade completely inside the 8-hour candle. So today, what did we do? Pullbacks or buy zones. We came into the body of that 8 a.m. candle from yesterday. Here's the opening range, right? This is at 4 a.m. when Europe opens up, and the high of that candlestick is the high of the day so far. And so now we're going to see what that 8 a.m. candlestick does. Pullbacks, still buy zones, very heavy congestion along the path between 567 and 568. For the futures, it works much better than here, but the value area high-low tends to give us the regions that these price actions will expand during the course of the day. And so this is our value area currently, and the range expansion, could it get to 572? Yeah, it could. It could. Dips are buy zones. So we're just going to watch, trade the dip long. That's going to be the best bet. All right? Let's take a look at the cues. Same sort of thing, heavy congestion, 3-4 days. You can see from the daily chart, it's telling us the same sort of thing, right? Tight candle compression all inside of September the 19th, which was the breakout day after the Fed, right? We're sitting right inside of it. So something's about to happen. We don't know what. What do I like to do? You know, trying to step in front of a bus for a lot of years, it tells me to just wait to see the lights of the bus slowing down. And although we see a little bit, we are still higher highs, higher lows inside of this candlestick, still with tight formations. So it is a buy the dip. Now, could we have a shakeout where the buy the dip would be deep? Yes. What do we want to do? Here's our 4 a.m. candle open. We've completely filled the gap in this 7 a.m. candlestick as we move into 8 o'clock very shortly. So from that perspective, what we're looking for is where can I find balance? Here we have the where is this it? 16, 17, 18. Wow. Yesterday's, I know that's not today's. Yesterday's 1600 candlestick was very tight. So it tells us that there is some sort of noise. Sorry, I'm in the cues. I keep forgetting. It's a 4 a.m. candle that we look at, and that's been drawn. Great. Remove. Okay, so what we are doing is coming back into the point of control and the VWAP and bouncing right off of it. Really, really simple right now. Very simple. 8 a.m. yesterday, same sort of thing. We are inside of this candlestick. Could we go all the way to the base of value area low? Absolutely. Absolutely we could. Use your Fibonacci to draw the region between value area high, value area low, which is what I've done, and the range expansions are going to give you the target areas outside. They've been phenomenal. particularly for the futures. Okay, so now if you're saying to yourself, wait a second, I know it's by the dip, but can I play the dip? Of course you can. Of course you can. You're under the VWAP, but you have cross current of upward moving averages, and so the very best thing to do would be to wait for the bounce, maybe the floor or the low of this 4 a.m. candlestick, and then take it from there, from 484. You can walk it down, 481, maybe it even gets to 479. Okay, but it is a buy the dip. So the first guys and gals to come in are going to do just that. Let's take a look at the ES. All right, quick snapshot of the daily. Doesn't look quite like the SPY and the Qs. We see the futures really running fairly hot, and my suspicion is that the participants are just simply using them to collect alpha, and if they're trying to short it, it's continuing to move up, right? So here's what we have. Big wide range, opening candlestick formation 4 days ago, giving us potentially a new congested floor. What did we come into? Faded right into the point of control. This is Europe opening, that 4 a.m. candlestick formation. Here we are at our 6 p.m. formation. Look at where we came to. Right to the base and bounced. Now, it does help that the point of control is there, but folks, this is the reason I'm measuring this 1 hour candlestick. It's been phenomenal to find baseline bounces. And so do it, replicate it, use it, teach somebody. All right, we're here to learn together. Don't hoard information because you want to be the cool cat. Just share what you know. Trust me, it comes around. All right, so this is why I'm looking at it. The pullback into the point of control area, absolutely fantastic. And now bouncing. What's it bouncing to? High, low, lower high, lower low, lower high, lower low, lower high, lower low. But these formations are still bullish. So here's the thing. You've got to let it bounce into the top of that 4 a.m. candlestick to consider the short action at this outset, in my mind. Okay? So look at the Fibonacci. Value area high, value area low. Look where it came into. It's bananas. It's crazy. They're just using these simple algorithmic motions. We just find the pattern and we just follow along. And then, guess what? Pattern's going to break. And so we have to look for the next one. But until it breaks, let's just do what it's telling us. And that is, we've got upward formations here. We buy the dip, heavy congestion, and the dip this morning is the low of that 6 p.m. candlestick at 1800 hours. All right, let's go to the NQ. All right, quick peek at the day. Same sort of thing, right? Higher lows, higher highs. Well outside the range of the candle formations for follow through. So they look very different to the SPY and the Qs, which I find also to be very interesting, but I don't know what I'm seeing yet. I just know that I'm seeing it, and my brain's just got to parse through what's going on. So here we are. First, let's remind ourselves, value area high, value area low, Fibonacci expansion, and what do you know? Into the 1618 this morning. Look at where we come into. Here is the opening range candlestick, base of that opening hour candlestick, almost the low, right? So you watch it come in there, watch it grab hold. That's where you can take that long. But high, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. You need to take profit when you get up there into those value area highs or the prior congestion. Here is the midnight candlestick, also very important for the NQ. Thanks to Matthew Mickey. I would never have looked at this candlestick in a million years. Never considered it. And he says, keep your eyes on it. It matters. Take a look. 6 p.m. candle happens to match the midnight candle, happens to give us the low for the bounce formation, right? So our hourly chart is in a cross current because the price patterns are telling us downside motion. The trend patterns are telling us upside motion. So we wait for the dips and then sell into strength. All right? That is the goal. Let's take a look at the YM. Let me delete this. Look at what we're looking at. Higher high, higher low, higher high, higher low. But price compression tells us that it's slowing down. Now, the volume by trend, the volume price trend analysis does not show slowing down, but the candlestick compressions do. And so remember, these are always going to be lagging, right? So whatever on that one. If we take a peek at this, let me make sure I have this right. Nope. Somehow, sometimes. Okay, value area high, value area low. Oh, look at that. 1.5 to 1.68. It's phenomenal. This is not accidental. It absolutely is not. So yesterday we had a lot of trouble getting over 42,500. Now we've just turned it into frontline support in my mind, right? But the dips continue to be savage. We have consumer sentiment, 10 o'clock. So let these charts shake out for the first 30 minutes. I'm getting a lot better win-loss percentage rates by waiting that first half hour, unless there is a clean line in the sand to tell me what to do. Of course, my very favorite places to trade are in these kinds of horrible-looking price patterns because they give me confidence about where support and resistance might be. Trending ones, they give me a little trouble, right? Because I'm always double thinking and overthinking where the price points actually are going to sit. So my hope is that I get another sideways day because I'd like to pad my accounts. And so if it doesn't, dips or buys. As long as we keep holding higher highs, we're in good shape. Right now, we're not. And so it's telling us if we buy the dip, take some profit there, realize your moving averages have to converge and get you on the way up. All right. Did I do the 4 a.m. candlestick here? No. Let's do 4 a.m. candlestick is the high across the board thus far in all the indices, the opening of London. And then, we've got folks collapsing. And there is our 18. Ooh, where is this? Nope. Hang on, folks. Let me remove this rectangle and then put in the brand new one for 1600. I hate it when I have to do this stuff when you guys are listening. But my apologies. Yeah, okay, there we go. Okay, so we can see a little bit of overlap, but this is what we're staring down, and look, it comes right inside of the body, hits the moving average, hits yesterday's VWAP, and begins to bounce. Also, the POC just above there, right? So just don't overcomplicate it, folks. This is a little bit of a messy patch, right? Because we've got downward up here and downward up here, but trend up here. Wait until it tells you the same thing, right? And if you are trying to get up over the pressure of a prior hour candlestick close and you bounce and you can't get into the candlestick before that open, they're in a decision zone. So you can either take the trade long out of the break of 567 or wait for it to come down and collapse into the POC or the VWAP, which that's what I am looking for. Ideally, I want to buy down here. All right. Thanks so much, everyone, and I'll see you on the streams. Sorry about being a little long today.